Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too. So for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right, good morning, guys. Welcome back to another live stream. Thank you for being here. Taking a look at markets for what is, it's not a really big news day, but it's still a really big day because, we had a lot of big news recently. Between the jobs number on Friday, we had NFP, right? And we had CPI yesterday. So we've got a good read on inflation. We've got a good read on jobs. And this is one of those instances where it now is kind of a let's trade that scenario, right? Like, so now we have some data, we have some stuff to work on, and we can kind of use that. So I love these sort of environments when you do get past the news and you have some data, and then you can actually just kind of trade what that data has told you. So what we'll do here today, I think would be constructive, would be to kind of look through what we've got recently and make up some decisions, make up some kind of where we want to land in terms of setups right now. So I'll be walking you through my current ideas, my current positions, etc. Let's start out really quick by just taking a look at the full market view. We will be off to the races here. Okay, so first of all, yesterday, it's no surprise at all that the S&P 500 completely reversed and went back up. Same thing with the Dow, same thing with the NASDAQ. These things are just so unbeatable recently, and they won't be forever. They will start to have, their come down to reality moment, but recently they've just been so strong. Will gold go down? We'll talk about gold, don't worry. Everybody wants to know about gold. Dollar index, a good place to start if you are a gold trader. So the index, the dollar index, popped a little bit on CPI yesterday, right? But it faded pretty quick. And I think that this is indicative of kind of the overall, I'm looking for a vocabulary word, symptoms of the dollar, the overall condition, probably. Condition of the dollar right now is a little bit weak because, again, we kind of look at the full picture. A lot of the economic data that's been coming out has been pretty poor. Not like, oh, this is crashing, but it's just been a lot lackluster compared to what people have thought it would be. And so we've seen that cooling in the U.S. economy persist at the same time with jobs data coming out weak, right? Sure, you have a hot CPI print, but there's still a lot of pressure for Fed officials to cut rates. And if they cut rates, that's going to be the dominant story to dollar strength or weakness. So I think we can pencil in, right, with my sweater, the little SpongeBob. You guys like the sweater, by the way? I love SpongeBob, and everybody knows that episode if you know SpongeBob. But anyways, dollar, in my view, continues to look weak until further notice. That weakness is giving way to some nice strength in the pound and the euro, and could also lead to some strength in the dollar. In gold, right? A weaker dollar, generally good for gold. Dope sweatshirt. Thank you very much. Appreciate that. Yeah, the dollar yen is probably worth mentioning as well. A little bit of a change in pace in the yen recently. In fact, let's start with Japan really quick. The Nikkei has given back a lot of its gains here recently. Here's a daily chart. It's still a monster uptrend. The S&P 500 has actually been even outperformed recently by the Nikkei. The Nikkei is, of course, the Japanese stock market, and it's been shooting straight up here pretty much since the beginning of the year. This thing has been on a tear. A little bit of a pullback here recently with The Bank of Japan talking about potentially lifting some of its very dovish stances, and the Bank of Japan has been dovish for so long. It's been on like a decades-long kind of ultra dovish situation, but now the Japanese economy seems to be expanding and growing, and of course the stock market loves that. But they don't love the fact that the central bank there, the Bank of Japan, has kind of been like, "Ooh, we might need to kind of come off some of our dovishness," and of course dovishness generally is accommodating to businesses. So if they come off of that, it could kind of short term hurt the story here. That being said, I still think that parts of Asia could be very, very strong plays over the longer period. Let's take a quick look at the yen against the dollar here. So dollar yen came down pretty hard here recently, but with some of this resurgence in dollar strength just in the last day or so, it's bouncing off of support. But this movement lower, guys, that is pretty much the same story that's happening with the Bank of Japan. The dollar is weakening relative to a strengthening Japanese yen, right? So something to think about there. One other thing to think about too, when it comes to the dollar yen, is if we take a look at the USD side of things, the economy, like I mentioned earlier, continues to kind of cool. Fed is expected to cut rates, whether that be middle of the year or even perhaps later in the year. Both of those are still kind of, broader speaking, a dollar bearish story. So I do think we could actually see kind of a longer term secular trend lower on the dollar yen. So yeah. How far can that go? Well, when it comes to trends, for me, I don't like to really try and predict where they will go, but rather just kind of stay the course as long as that trend still looks intact. So for example, bearish under this breakout, maybe we make a move down here. We break that level, okay, we look for further structure, or at the very least, we just kind of acknowledge that this could be trending lower. If the yen strengthens this year, it's going to really make markets interesting. A lot of traders do what is called the carry trade. In FX, if you're an FX trader, amongst big time traders, this is one of the most popular trades there is. It's simply the idea of buying a higher yielding currency, right? Something that yields higher interest, and shorting or funding that trade by shorting a currency that does not offer a high yield. So you can borrow it for cheap, right? So a very simple one is UJ, right? The US dollar yields a nice interest, so people will sell the yen and buy the dollar. But if this trade becomes less attractive, meaning they lower interest rates in the US, so that's not as attractive to buy, right? The US dollar will weaken. And so maybe that trade will unwind, and we'll actually see the carry trade unwind trade, which is an incredibly volatile period where all the people who were parked in this dollar yen long for capturing interest, they unwind, they sell their dollars and they go back into yen, right? They cover their borrowed currency. In fact, someone who spoke very wisely on this topic was Kathy Lean, and she and I had several conversations here recently, but she was interviewing me for one of her books that she's writing, which I'm really, really excited to be a part of. But yeah, her theory there is that the carry trade unwind for the yen could be very interesting this year, has the potential to really shake up markets if that does happen. An area that I am actually bullish, guys, I added to my gold trade. Crazy, right? Nick, what the heck? You're buying up here? I am. Not a huge position add, but I added a small amount to my gold trade. Also, can I get a audience check on something? I made my my long position here. I made it slightly lighter. What do you guys think? Do you like the? Let me ask you guys really quick. Help me with this really fast. Do you like option 1? Okay. Option 1. I'm not sure, so please vote honestly. Do you like option 1, this current kind of soft, pasty green, or do you like it lighter, something more like that? So this is option 2. Do you like option 1 or option 2? Let me know, guys, because of course, if you're somebody who watches the stream regularly, this actually matters probably a lot to you, because if you're sitting here and you're watching this all the time, the slight changes are important. So this is option 1. This is option 2. Option 1, option 2. Which one? Let me know. Comment it in the chat really quick. I'm very curious to see what you guys say. Okay. Have you tried blue? I have tried blue. I was looking at blue this morning. Okay, that is really indecisive. Chandler or James, can one of you guys throw up a poll and we get a little bit more of a... So again, this is 2. Okay. And this is 1. Actually, Chandler or James, poll creators out there, let's do a third one. Okay. Here's option 3. I don't know if I like that. I might override that one. Maybe a softer one. This stuff matters, guys. Oh, okay. Okay. All right, this is 3. Okay. Ready? Help me out. I need your opinion in this. Option 1, remember, option 1 is the dark, the strongest green. Option 2 is the softest, very soft green, and option 3 is this soft blue. I am very, very unsure. You guys let me know. Can you vote for me? We'll have that pull up in a second, I think. So just a moment. I'm going to pull up my own stream so that I can watch for that poll, because I can't see it from our software. I wish I could. All right. We will have a poll on YouTube here in just a moment, guys. You guys can cast your vote, and I'll just honor it. Honestly, I like all 3. I like 1, 2, I like 3. Again, stronger green, softer green, and soft blue. All right, polls are up. Cast your vote, guys. So again, last call. Here's our run through in case you're missing the options. Option 1 is this. Okay, that's option 1. Option 2 is a softer green. Okay, almost like a camo green. And option 3 is a soft blue. Okay, which one is you guys' favorite? Let me know. I'm sorry I'm spending so much time on this, but are you including the colorblind in the poll? Ivan says, yes, we leave no one out of this. But actually, I don't know. That is a good question. Is this easier to see? I feel like this might be easier to see for colorblind people, but I don't know. Blue looks so weird. Really? Anyways, gray stop loss. That's kind of fancy. I don't know, but I feel like I'm now adding too many colors, to be honest. I'm very conflicted, guys. I don't know. Cast your votes. There's 90 votes already, so get your votes in there. Which one do you like? Again, option 1, option 2, option 3. If we're too close, I'm just going to pick one. We are really close. You guys, we're at like 30, 30, 30. Option 1 took the lead just now. Option 1 is this one. That's back to where we started, which might be fine. I mean, if you guys just prefer that, then let's do it. It's hard to tell the difference between blue and green and between yellow and red for people with color vision deficiency. Okay, well, for now, we're leading with this color, which I'm perfectly fine with. We are long gold. I mentioned I added to my position, and I want to go back to that for a second because I mentioned I bought gold yesterday again. My theory here is this. You might say, well, Nick, you're chasing. I love the conditions for gold right now. I loved them more after CPI. Okay. And I've made this explanation several times, but let me break this down one last time. And it probably won't be the last time. I'm probably lying. Okay. CPI was actually hot. Jobs were cooling. I have to stick to my initial plan here recently, which has been, if that's the case, I've been saying this for a while. If CPI is strong or hot, right? If it's sticky, if it's stubborn, if it's problematic, but jobs are also cooling, that's an environment that's not too promising for outlook. And in that environment, what do you want to be in? Well, maybe bonds, maybe gold. I do have some bond positions, but right now I'm really liking this scenario for gold. So I saw that scenario play out, and market dropped on CPI initially, but I think that the market could be getting it wrong here, or at the very least, maybe over correcting. And yes, this is a brief pullback. This is hardly a pullback, right? This is just a what is that? A $44 move in the price of gold. I mean, that's a pretty meaningful pullback. It just doesn't look like it because we've been so volatile. But I added longs here yesterday. Stop losses trailed for both positions. So here's my initial entry, right? We're very much in the green on that. But I added another position here, really small risk, right? Because again, this is only a very small move. So I'll still be very profitable if this stops me out. But my theory here is that I think we could actually hold. I loved the way we were holding price action yesterday in this area. And as long as we continue to hold that support structure, I'll continue to hold my gold long, my initial gold long, but now my new gold long. I added another trade. Share that inside of the group. We'll stay tactically long on this. And guys, silver's waking up. If you are a gold trader right now, you know where your eyes need to be on? Silver. Because if you want to see a metal market run, I've said this like a broken record recently. I've been talking about metals so much. Okay, look, if you really want to see gold run, you need to see silver run too. In fact, you need silver to lead, to be honest. If you really want to see metals explode, you need silver to participate. Because you know what? Silver is, you might say, oh, no, you don't. Gold is king. Yeah. If you've been around the block for a while, you know that in huge metal market runs, the gold silver ratio swings back. You guys ready for a mind-blowing thing? If you're a metals trader, if you trade gold or you probably don't trade silver. Most people don't. Look, this is important. XAU USD / ready? XAG USD. Does anybody know what this is? Does anybody know what it is I'm pulling up? Name this cross. What is this called? There's a fancy name for it. You guys know what it is? Somebody in the chat's going to get it. I know somebody's going to say it because somebody knows where I'm going with this. We've just crossed gold and silver, and we created this fancy magical chart. Okay? What is this called? The ratio. The gold to silver ratio. Yes. Nick, do you sell courses? No, I don't. They're free in my YouTube channel. Just go to my playlist section. You can go through my courses. They're free. Gold to silver ratio. Yes. Okay, so check this out. Look at this. We're looking at the gold to silver ratio. I love looking at this chart. I was looking at it last night. You can see my markups. Okay, look, longer term, this is just a chart that swings back and forth. Okay. When this chart gets really high, what that's telling you is that it takes way more ounces of silver to get 1 ounce of gold. Okay. So at one point during COVID or pre-COVID, right, when everything started kind of falling apart, the metals market dropped like crazy. Okay. Let's look at COVID as an example. Okay. Again, if you're a metal trader, if you trade gold, you need to pay attention for a second, because a lot of you probably have never even heard of this concept or don't even pay attention to silver, but silver is so key. to the metals. All right, look, during 2020, when everything kind of fell out of the floor, the gold to silver ratio launched higher. It took you 124 ounces of silver to get 1 ounce of gold. Historically, really, really, really high, right? That didn't last. And I didn't think it would last. And I don't think that it will last when it remains elevated for very long, because silver, what this is telling you is silver versus gold, which one is cheap, which one is expensive relative to one another and their historical averages. Look, when this price gets very high, that tells you that silver is probably very cheap relative to gold. When metals markets get really strong, silver leads. Let me tell you about 2 different instances where we saw huge metal market runs. 2009, as the great financial crisis kind of happened, look what happened to the gold silver ratio. Silver rapidly outpaced gold, causing this ratio to go down, right? It took less ounces of silver suddenly to get an ounce of gold. At one point, it even went to 32, right? This was a metal market bull run. Silver led, okay? What about 2020? Look at this. When everything fell apart, because everybody was scared of anything, initially all the metals dropped along with the stock market and everything else. But then once everything reset, we got really, suddenly metals got really popular. Which one led? Silver led. Okay. These are the huge gains that have happened recently in the metals world. Okay. When the metal market bull run happens, historically, silver actually leads. So if we're really going to see gold rocket, you want to see this start to go down, because in that case, silver is going to rocket more. That's my thought process. So I actually own silver. I own some physical silver, but I also own, of course, some paper silver, aka SLV. Here is one of my trades. I've got a position on this, and yeah, I mean, I have this and I also have gold. I like both on the long side, but I do think that if you're watching the metals market right now, you have to acknowledge that we need silver to participate. So keep your eye, if you are a bull on metals, or if you're a bear, keep your eye on silver. It's important. Okay. So keep your eye out there for silver. Don't forget about it. Nobody likes it. Nobody talks about it. Nobody trades it, but it is a very important component to a bull run in metals. Okay. Araven, do me a favor, please don't spam the chat. It makes it really hard for me to read anybody else's comments. And I know you wanted your comment to be read, and I'm thankful that you're watching me, and I'm thankful that you would like your comment read, but there's also other people that have questions and things like that. Nick, what are your thoughts on penny stocks? I don't touch them. I don't think that there's, for me, there's not much there. NASDAQ coming down here. Take a look at the daily chart, guys. Again, what I would love to see here, and it doesn't matter what I'd love to see, because at the end of the day, market doesn't care, but let me just pretend it does for a second. I'd love to see the indices come down. I'd love to see metals run. That would be a really good scenario, of course, for my own positioning, but also because I think that would be appropriate. I think that would make sense. Again, jobs data weak, inflation stubborn, indices, in my view, don't look super attractive at these levels. I still think they should have a good year. I'm so bullish overall on the year, but I think they're due for a pullback. I think earnings are going to get challenged by some of the slowdown in the economy. And as soon as you see that, I think indices roll over and take a break. At the same time, I think in that scenario, metals could do quite well. So we'll continue to watch gold, silver, etc. And of course, we'll keep an eye on the dollar. The dollar index, I do think, has room to come down lower. Again, the theory here, why dollar weakness? Well, let's go through some stuff really quick. So I am still in a euro dollar position as well. I'm long euro dollar. It popped up on my watch list here on the EDGEFINDER. So I am long euro. I'll go over that in a second, but let me show you some stuff here, guys. I love this chart, by the way, the NFP chart on the EDGEFINDER. So look at this. Here's a recap of jobs. We had jobs come out and they were higher than expectations. The red is forecast. The red dot is forecast, right? We had expectations, and this might have confused people initially. If you don't fully have this chart, or you know how to read data properly for jobs, you might have said, well, look, the jobs beat expectations, right? But remember, this is what jobs were added, okay? But look at the revisions. The revisions matter just as much. Revisions are basically, as the new data comes in, they oftentimes revise the old data. It's a kind of a frustrating thing, because why do they always revise it? And why can't they just have the numbers right? Well, jobs data is inherently a very difficult thing, I guess, to track. Regardless, here's what we got. Revisions from that previous really all-star jobs data were very negative, okay? So when you take the difference of these two numbers and you say, well, we added some jobs, but we lost a lot more than we thought we had here, suddenly you have a picture where jobs growth is not actually very attractive. And job growth deteriorating is indicative of perhaps a slowing economy. In fact, jobs are probably the most important indicator of the economy. So jobs growth, not great, right? And then we can take a look at some of the inflation data, go through that. Let's just look at the US, and let's also just keep Europe on there for a second. So look at the US, okay? US is in blue. The US inflation data came down, and then it's kind of flatlined, but it's still staying flat. Guys, if we want to see interest rate cuts, we need to see inflation coming down. That's what we've heard from the Fed. But if inflation stays stubborn, while jobs data is cooling, we still may have to cut rates, but it's not going to be for the same holy grail Goldilocks scenario, right? If we still have to cut rates while inflation is still kind of sticky, that's going to create a little bit of a troublesome outlook for markets. So again, this is why we look at market data. This is why we understand it. It helps us to understand the real trends that are going on. That's why, despite sticky inflation, to me, the dollar still looks weak. Yes, you had a beat in inflation, but you've also got a lot of economic reads that are not super promising, right? So you kind of have to stay tactical here. You have to look at the data, parse through it yourself, and understand this stuff. This is very, very important. Again, a lot of traders don't get me all started on that rant, but a lot of traders do not look at fundamentals. They don't consider them in their analysis, but it's telling you the story right in front of you. In my view, the story is pretty clear right now. It's the most obvious trade to me right now is to stay kind of cash heavy and kind of long gold, silver. That's my opinion. The reason for that is, again, I think we're seeing a little bit of slowdown in the economy. I think you might get an opportunity to deploy cash at a better spot in the indices. And again, I could be dead wrong. So please understand, I'm not a fortune teller when it comes to financial markets. These are my opinions. I'll act on them. You should not. You should do your own due diligence. But I'm looking for a pullback. I'm looking for a corrective move on indices. I'm looking to stay long gold and silver at these times. At this time. And again, I have a way to exit this theory if I'm wrong. So what I mean by that is that if this market rolls over and breaks through support, it's going to take me out of my trades, my long position on gold. Same thing for silver. I have, just below structure here, my stop loss is in place to kind of manage that position. Indices are rolling over here this morning, but if it's anything like recently, they'll probably pop back by the end of the day, though I am not trading them at these levels. Like I mentioned several times recently, looking for a bit of a healthy corrective move on the indices before I can get long. I'd also like to see them show up in the top setups page again. If indices start popping up here, then great. I might have a reason to trade them, but I'm very happy just trading gold as I see here and euro dollar. Both of these are current positions for me. I did mention I would talk about my EU trade, so let me just pull that up. So long euro, this is a position for me currently. Let me just clean up my charts really quick. So I went long euro dollar here, and so far, I think we're looking okay. I still like this trade. The theory here is, again, mostly based on dollar weakness. As I just laid out kind of my same theory for gold. This is a small position for me, but my idea is that we've been trending nicely to the upside on the euro. So we are getting a nice trend score here on the EDGEFINDER. In terms of crossing the economic factors, we're slightly leaning euro for now. Inflation sticky in the US, so this kind of works against us, but the labor market really cooling offsets that in the algorithm's output. So now we're looking at, okay, cross inflation, cross labor market out because of what we discussed with the dollar here already. I won't repeat myself too much there. Interest rates, commitment of traders data slightly favoring the euro at this time, and we're left with a score of +5. Technicals, pretty straightforward here, kind of an upward trend, pulling back into this structure. I went long, shared that one inside of the Discord earlier this week. By the way, if you guys aren't already in the Discord channel, we can drop the link really quick for that. It is free to join our Discord channel. There's plenty of value that gets put in there. So if you're not in the Discord, we'll drop the link directly to join that Discord there. And real quick, I'll just show you what that looks like. So inside of the Discord, we're sharing all sorts of good stuff. We've got a chat room, we've got strategy guides and daily analysis, and of course, you can also see the trades being taken by myself. Here's the gold trade, and I added to my gold trade yesterday. So we're sharing all of our updates here. So if you're not already inside of the Discord, again, here is the link. It's been dropped in the chat for you, and we'll see you in there if you're not in there already. Okay, real quick, guys, we're gonna bring Frank into the picture here for a moment. We'll talk to him in just a second. But before we do that, we're gonna thank our sponsors who make this show possible, and then we'll meet back up with Frank just after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right. Hey, Frank, how's it going, man?
Pretty good. How are you?
Pretty good. Hey, are you still long oil?
I am, and I just got long gold this morning.
Oh, very nice. Walk us through commodities for today, because oil's making a pretty big move, and I guess start wherever you want, but you can share your screen and we can see what you got for us.
Sure. So I got in oil, I think it's been like over a week now. It's probably 2 weeks at this point, but I've held on to this in the 29s. Oil just, in my opinion, looks stronger, even though the dollar had been sort of struggling the past, I'd say several days, a couple of weeks, based on this current environment of what we think could be stagflation. But what I was seeing was not gold, but oil retesting these highs, and I was looking at a potential break in the structure here, which now it seems like it's retesting again, but so far oil has just been very stagnant. So I don't know what's going to happen today, but I've been holding this for a while now just because price has not moved in either direction. But that's where I stand with oil. Gold, on the other hand, I've been wanting to get long. I just missed my opportunity initially. And yesterday's pullback towards the previous all-time highs was sort of what I wanted to see, especially with the higher inflation report. So seeing it pull back yesterday was a little confusing, but I was still, relatively happy with getting a pullback here. So I am long gold and still hesitant about the indices, even though they keep climbing higher. But inflation yesterday was a big factor to me.
Yeah, and I think we discussed at length kind of that move in gold yesterday when it was happening on screen. I kind of said myself that I think that this is not a pullback that will last, and of course it has not proven me right or wrong yet, but this pullback that happened yesterday on CPI, again, if you look at CPI in isolation, yeah, it probably justifies moving lower on gold initially because hot inflation, they're going to keep rates higher for longer. Okay. But then when you zoom out and you look at the picture, as you're pointing out, like our theory about increased risk for stagflation, not necessarily like, oh, we're going to enter stagflation for sure, but rather just the increased possibility that that could be forming, that we're seeing cooling economic data at the same time of stubborn inflation. That context, I think, actually made that pullback yesterday look attractive. So I really like your trade, even though, yes, we're near all-time highs. We've talked about this many times. Momentum traders, their goal is not to always buy low and sell high. That's actually a very difficult strategy to really employ. Sounds easy on paper, but what we often find ourselves doing is buying high and trying to sell higher. Because if we're truly in a bull market here for metals, which we could be, we could kind of fizzle out. But if we are, pullbacks like these should be bought quickly. And if they're not, I'll trail out personally of my positions, stop out of there. And then I made this point just before you came on, Frank, but if metals are really going to run, you got to see participation from silver. I made this point earlier, but in the previous several bull market runs for gold, silver during that same time actually has outperformed. So I'm keeping a close eye on silver as well. We want to see silver participate. In fact, we want to see silver lead and outperform. That will be a good clue that the metal market run is actually kind of forming here. I don't know. What are your thoughts on that? Did I miss anything there?
I don't know much about silver, but I'll take your word for it about how needs to be participation in all metals markets. But I agree with you on the cooling jobs data and the cooling economic output. That's what justified getting long for me, and it's what it just makes sense in a fundamental stance that gold now has some sort of strength, and the market has been pricing it in, and this is where it's taken us so far. It doesn't necessarily mean that this is the end of the run here too. I'm just hoping that the movement continues. So
yeah, and it's a common the tricky thing about financial markets is that a lot of times when something looks too high, that's actually the perfect time to be buying it, which sounds ludicrous. As you look at something hitting its all-time high, it's almost like repulsive to think, oh, well, now it's time to buy it. But sometimes when the market is moving with true momentum, it's a great time. And, again, I'm not saying, and I want to reiterate, it's not a good time ever, whether it be all-time highs or not, to go all in on something. That's where people make big mistakes, is they see an all-time high and they're like, oh, this is it. It is absolutely going higher. Whereas what we're saying is we don't believe fully in anything when it comes to financial markets. We test the waters, we manage risk. And, if you're getting long gold, you're not betting your whole life on it. You're tactical with it. And so that's what we're talking about. I want to make that distinction for people who are newer in the audience. I do also want to say, Frank, we'll bring in Chris here to the conversation in just a moment. Chris joins us here several days out of the week to go through markets. He's a very experienced trader, has been doing it for some time. So we'll bring him in just a moment. But before we do so, we're just going to thank our sponsor here behind the scenes that make these shows possible. And they'll be joined with Chris just after this. Check it out. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering a 7-day free trial and 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, guys, we are back with Chris and Frank now. Hey, Chris, how's it going, man?
I'm doing well, guys. How are you guys? Happy
Good,
Wednesday.
good to see you.
Good.
You too. Just getting some positions running on Pfizer, right? Meow.
Oh, okay, a little Pfizer action.
It's been a while.
Explain to us what you're doing here, Chris, because Pfizer is an interesting one. I've had so many of my stock buddies. I'm thinking of Garrett, Frank. They've been asking, hey, is it time on Pfizer? So what do you think, Chris?
So on the weekly chart, here I'll share my screen and we can go back and forth if you guys want to. So let me do this.
Yeah.
I am going to do something synthetic. I'm not going to take any ownership. I've had ownership. I have it in my personal account. I've been doing some covered calls. This is nice to see. My break even's like 28.50. I'm like back to break even now. I'm not really getting the premiums that I want to sell calls against it. So what I'm going to do is I'm basically doing just a call option, but I'm doing something deep in the money. So I'm buying the 25 call and I'm going out to January of this year, or I'm sorry, January of next year. So I'm doing like a leap essentially, and I'm going to sell every 30 to 60 days. I'm going to sell a call against it. So here's the way the calculation works right now. I am doing a 1/17/2025 expiration. So this is on Pfizer. Everybody see me typing this out. Yeah. So we'll do, this is the $25 long call, right? I'm paying $4 and about 80 cents for that. So that's my debit. Okay. So that puts me at a break even around 29. So that's 29.80 is my break even. What I'm doing now is I'm selling a 5/17 expiration, $32 sell call for 28 cents credit. So that lowers my cost basis on the actual option. So 29.52 is going to be my break even. Now at $32, if Pfizer is greater than 32, I can let it go, right? Like I can let this go at 32. I don't have to wait all the way to January, but that would give me a net profit of around what? $2.48. So 248 would be my profit. I'm using a position like 10 contracts. So you can do the math there. That's 2480. And possibly that 2480, as far as buying power too, it's like that's way cheaper than buying the stock. If I bought 1,000 shares of Pfizer, it's going to set me back, $25,000. I buy this, it sets me back, $4,800.
So Chris, let me jump in and just ask a question here on
Yeah.
behalf of maybe some of the newer options traders, aka myself and Frank. We're wondering, I'm wondering, why this instead of just owning the shares? I know there is an answer, but I'm just trying to ask on behalf of somebody who might not understand it.
Yep.
So Pfizer's trading down here. If you like Pfizer, why not just own the shares? And what's the theory here with setting up your options? I know obviously it's in the name, optionality here for what could happen, but lay that plan out for us in just kind of layman's terms.
Sure. So if I own the shares, it really is, let's talk buying power. So the thing I sacrifice if I just do options is I don't have any dividends. I don't have any voting rights. Yep. So I forfeit that. However, if I own shares, let's say, and I'm taking a position that's worth 1,000 shares. Okay. So this is what I'm talking about. So 1,000 shares is 10 contracts and options. But if I own 1,000 shares and the current price is $28.49, this is what it's going to cost me to take the trade. 28.49 times 1,000. It's going to cost me, as far as
Right.
cash and buying power, $28,490. Right now, not everyone has that type of capital to say, this is what I'm going to allocate to Pfizer. So
Right.
what I'm doing is I'm taking 10 contracts and I'm doing a $25 long call for $4.80. Now that times 1,000 is $4,800.
Right.
So just in buying power alone, there's a huge difference, right? I mean, I'm saving myself $24,000 roughly in buying power. I have
Yep.
been watching this stock for months and months because I have been in this drawdown as I've like taken, and I bought the shares, and I looked left on this chart. I started buying Pfizer around 34. Credit spreads, assignments, I ended up owning it with a credit spread that pushed me down to like 29. I've lowered my cost basis a little bit. The premiums have not been great. Now, I will admit I might be early to this, but what I did see on this daily time frame, you can see we have tons of overbought conditions. So this, Nick, you know this indicator very well.
Of course.
Overbought conditions, or I'm sorry, oversold conditions with the relative strength, and we have divergence with the momentum oscillator. Now, on the weekly time frame, I don't see this very often, but man, when I get something like this on a daily and weekly chart, I am extremely interested in some type of correction. Some
Mhm.
type of correction.
Yep.
Therefore, I think we have a directional play where Pfizer gets a little love. News-wise, what I read this week is that they're starting to pivot away from all the focus on COVID vaccines and work into more cancer vaccines and work into more cancer treatments and work into other drugs. Maybe they should get into Ozempic. Just throwing it out there. Maybe it helps.
Yeah.
But point is, I mean, technically we're due for a little bit of a recovery. I think fair value on this stock is around $34 to $35. And so I'm not looking to hold longer term on Pfizer. I'm looking to see over the next maybe 3 to 4 to 5 months. If this thing goes from lows at
Sure.
26 up to 32, 33, $34, I'll take profit. Longer term, I'm not that
Fair enough.
interested in holding. Yeah.
Yeah, that's awesome. Thanks
So
for breaking
that's
that down for us, Chris. And again, I think for audience members who are just tuning in, Chris, of course, he has a ton of experience in all sorts of different markets, everything from FX to stocks to indices to commodities to whatever. And it's always cool to hear from you, Chris, on how you're kind of approaching and really carving out what you like to do with options. And I do think that is one of the coolest things with options is you can really carve out a specific trade. And as you've got it on the screen there, like mapping it out literally with how a trade can play out. Frank, what do you think about, you've been dabbling with some options, and I wanna kind of just hear you out on some of your recent plays. I know you're doing something with Neo. What's your breakdown on Neo right now?
Sure. Neo is probably the only or one of the only things that's doing well for me right now. I'm still learning how to figure out the execution, I guess, on options because I've been taking some short-term plays on IWM, and I guess like when it expires, even if supposedly it's in the money or at least that's where it was marked at, I wonder if I'm reading it wrong or something, but they don't come out profitable. So it's very
Yeah,
it's weird to see some of these plays work out in the price, but then you realize a net loss. So I'm trying to figure that part out, but I'm
like if you
in
just bought
Neo.
a call or bought a put, like doesn't it have to get past your break even point?
So I had an iron condor, a sell iron condor. So price had to get within this price range. If it expired in that price range, you would walk away with, certain amount of money, which happened. I saw an expiration when price was there, but I guess it was executed on expiration at a different price.
Mm,
So I have to just keep looking into that and stuff. But for now, I've been selling or I've been doing verticals on Neo for the
yeah.
past 2 weeks. Last week was a good week for me, and now I have two verticals on Neo, and price is still doing well. Let me see where the verticals are. So I have one. There's I think it's a sell put at 6 and then a buy at 5.5, and then I have a 6 and then a 6.5. So I'm just basically hoping price stays above 6 the whole time, and by Friday, if price ends up higher than $6, I'll expire with the full amount of premium, and then I guess the buy put will offset some of the gains, but it also limits your loss. So I'm only fixed to get a certain amount
Sure.
with this sell put because I'm collecting premium, but I'm also buying a put, so that will expire worthless if it stays higher than 6, which is fine because the premium I collect is net more overall. So the two verticals are working out so far, and hopefully, price stays above that range.
Very cool. Thanks for breaking that down, Frank. And I guess, one of the things too with options and any of that sort of approach, it's very much impacted. And this is why we talk so much heavily about the indices themselves, right? If you have something that is exposed bullish or exposed bearish, it's going to a lot of times come down to what the indices are up to. Speaking of them, we are currently seeing, the NASDAQ down on the day, 0.7%. What I find very interesting is that the S&P 500 relatively unmoved, sitting at all-time highs. I imagine this is probably semiconductor exposure. Is that right? Yeah, it looks like a little semiconductor pullback here on the day. And if NVIDIA is in the red, then I won't believe it because it never's in the red. Well, we're down 2.75% on NVIDIA. I don't know. What Chris, what do you think about this? Is the NASDAQ going to lead if we see a pullback? Like, is it going to lead the downside, do you think?
I think NVIDIA is probably one of the most important stocks to watch right now because it is going to single-handedly be the reason that the market might turn over. So we've talked about how overbought things are, how divergent things are, how there's likely a correction. What's the major catalyst going to be? Market didn't seem to give a crap about, slightly higher CPI yesterday. We've got PPI tomorrow, FOMC next week on Wednesday. If we're putting in a top on NVIDIA, and we get and all I did on NVIDIA is this. I mean, here's a crazy run from $390 to the highs at almost $1,000. But if we struggle at these tops and this goes sideways, I think the entire market goes sideways with it. And if we obviously break lower to hit like a 30 to 38% retracement on NVIDIA, and I still think that we can have dips. I think that we can buy the dip, and this could be a healthy correction with high volatility. And it's this is the big earnings gap, right? So if we have a pullback into here, I think NVIDIA still stays bid, but that is enough to be that correction. And it would be crazy to think like one semiconductor stock is going to drag the whole market down with it. But look, Apple's already down. It's the biggest company in the market, right? Largest market cap.
Yeah.
Google's down.
Like the undefeated name, Apple. Here it is struggling. I just want to show you this. I'm gonna leave you guys with this before I step out. Check this out. Here's your heat map for the day. Very curious. I answered my own question here on accident with the S&P 500. It's almost exclusively today, very uniquely so. It's tech selling and led more heavily today by semiconductors. So the reason the NASDAQ's down, but the S&P 500 is because is not necessarily very down at all, is because the SPY has got all this name in it more heavily, whereas NASDAQ is very concentrated in this area. So kind of interesting to see. Chris, Frank, I'll leave you with that, guys. You guys have the show here for a few minutes. Enjoy it. And I just want to say before I step out too, for those of you guys who are newer to seeing a stream with Chris, and Chris has his own YouTube channel. He has his own content that he puts out, wonderful stuff there. And if you're not already following him, we're going to drop the link to his YouTube channel at the same time. He has a Discord channel you can join, all that sort of good stuff. I'm sure you'll hear about it there. So Chris, thank you very much for taking over the show, man.
My pleasure. Thanks for having me as always. Frank, you want to stay on for a little bit?
Yeah, I have a few things I want to ask too.
Awesome.
Or just, I guess, let you know about.
Okay.
I'm also in, I think I told you yesterday or the day before that I had calls on the VIX, and then I had a call on a short semiconductor ETF. Okay. I think I might have played it wrong because the expiration date I picked is Friday for the semiconductors,
Okay.
but
Which is that SMH? Is that the ticker?
it's SOXS.
That's right. XOSS. Yeah. There's also an
And
XOXX, which is the semiconductor. So you're in the leverage ones, correct?
right.
Yeah, you're in the triple. All right. So this is an inverse, yeah. So if you're long this is an inverse semiconductor
Correct.
play. So this would be up as the semiconductors go down. So SOXX, if this is going down, then X or SOXS would be going up. Okay.
Yes.
So are you in this with any ownership, or are you in this with just strictly an option play?
It's just an option play. It's just a call.
Okay. And what's the expiration and everything? Give me the setup.
Yeah, it's the 15th, so Friday.
So this
Um,
Friday.
yeah, which
Okay.
was too soon in my opinion when I look back.
Okay.
But um, the average price was 12 cents, so that was the debit.
Okay. What's the strike price?
3.5.
So
it's
you
got to
did
get to
a
350.
350 call for a 12-cent debit. Is that accurate?
Mm-hmm.
Okay. And right now that is not showing any profit, right?
Right.
Because your break even's 362. It's not, I mean, I think you're right when you said the expiration's too soon. Because if we're not there by Friday, you need this instrument to be at 362 or better for this thing to have any profit or be break even.
Yeah.
That's all.
But
So I'm cheering for you. If you give yourself a little bit more time, think about this. A 322 expiration, and one thing you might do if you're willing to, we can take a look at this. If I built this out right now, so SOXX, that's okay. I forgot the triple leverage one. Okay, so SOXS there. So if we went out to the 15th and you have a 350 call right now, that 12-cent debit that you paid is trading for 5 or 6 cents. If we were to roll this as an example, and here's what you can do. If you rolled it, you would close the current one for a small loss of like 7 cents, and then you would rebuy a new one. If you want to keep the same strike at 350, that would cost you 15 cents. So for a roll, again, not saying this is what you need to do, should do, but just as an option. So we would close, let me do the math here. It's just give you a little bit more time to see, like, maybe the overall market does have a chance for the semiconductor space to drop a little bit lower. If that is the case, then a little roll could help. But let's calculate a new break even just in case. So if we did, you have the 315 expiration, 350 long call for 12-cent debit. Okay, if you want to look at like a 328 expiration, 350 long call, that debit's trading for shows about 16 cents right now. Okay, so if you wanted to roll this, you could roll, which would be a minus 6 cents on this call, and then you buy a new one at 16 cents. So your net debit would be around 22 cents. So that changes your break even from 350 to 372, but that gives you an extra week to see if this thing can rip to the upside.
Is the -6 coming from the current value being 6 cents?
Correct.
Okay.
Yep. So if I go back to the 15th right here, can you see if I make the numbers a little bit larger? Maybe that helps. If we go 100%. So you can see that the 350 call that you're in is trading for about 5 to 6 cents right now. So you're going to lose 6 to 7 cents on that. If you close it and if you roll it, it does close that trade out and then reopens a new one. So you essentially close this call, open up a new call, and your net position would be, it's going to cost you 22 cents total. So your 350 long call is now break even at 372, but you get an extra week out of this. And so if 372 is achieved by next Friday, then you're in the money. And all we need to see that do, I mean, what would be that percentage move? Because what we can, this is a triple leverage instrument. So if we go up to, let's say 370 and change, that's a 16% move, which triple leverage, we need about a 5% move in the semiconductor space. So if I go SOXX, can we drop 5%? Well, let's find out what this current price is. So that decline to fill that gap is 3%. I mean, 5% is, it's possible, but that's a bit of a stretch by next week, unless on a weekly time frame. Let's check the ATR for a second. Okay, ATR averages about $12. Let's say we have a $12 move from current price. If we have a $12 move from current price, which is a weekly average, that's around that 5.756%. That puts your potential inverse ETF up around 17 to 18%.
Okay, gotcha.
It's going to be close, right? Or what's the worst case scenario? You lose 12 cents, right?
Yeah, so the idea of these calls were basically just shorts on the market was because I'm very long in my stock account on Webull. So
Okay.
these were kind of minor hedges against what might happen.
I see what you're saying.
So it wouldn't necessarily offset the losses if the market just tanked, but
Yeah.
it would pad a little bit. So losing money on here is to a long call on the short semiconductors triple leveraged ETF is more so just a small hedge. So I'm not
Sure.
too worried about these calls, but I do like the idea of rolling it because I still think the semiconductors are a bit high in
Yeah.
my opinion.
Well, I don't love the idea of rolling it with just 1 week out, because again, a long option, I mean, you have that waterfall effect, right? Where if you do a long option and price doesn't go your way pretty quickly, then you have that theta decay, and that's where you start to lose value on these options quickly if price doesn't go in your way. Now, let me ask you this. You're talking about being long in your overall portfolio. What about just doing, so instead of doing the triple leverage stuff, what if you actually just looked at an option on the actual semiconductor ETF itself?
Yeah.
And because I say that because this price integrity would be a little bit better than the triple leverage one that's going to be, recalculated, and that's meant for like very short term hedges. Not saying that we can't have the same move, but again, it's going to be a totally different price, and it's obviously super expensive. But when you say you're long overall in Webull, like what does that profile look like? Do you own like fractional shares of Nvidia and fractional shares of AMD, or what do you mean when you're saying long?
No, I have like, if I go to my account,
Mm-hmm.
I'm like 80 to 90% in the market. So that's being long S&P, that's being long tech stocks like Shopify, oil, Google, Tesla. So a
I
lot of
got you.
money is in those things. And yeah, Tesla's already doing pretty bad this year.
It is.
But if the rest of the market starts coming down too, that means I'm holding like a lot of tech. So
Yeah.
trying to leverage against that is my
Okay.
goal.
That's fair. Yeah, I mean, it makes sense. And there's look, as you and I've talked about, it's like there's always trade-offs, right? There's always trade-off in trading options. There's always trade-off in a portfolio to balance it. I mean, I look at it this way. The pairs trade would be if you're long tech, right? If you're long tech and tech goes down, if you're long, defensives, or you're long, consumer staples, um, that's a way to kind of pairs it where, if tech dips, and obviously the last 30 years tech has been the easiest thing to own and the most upside, and it's been ridiculous how quickly it snaps back. But what is interesting this year to me is how basically Apple has been the financing for Nvidia. I mean, Apple could do no wrong. It essentially traded just like the S&P for the last several years. Mag 7, it's number one. It's been, it's still one of the largest. It is the largest in the market right now. but Nvidia is not that far behind, right? Nvidia is now $2.23 trillion. Meta is $1.26 trillion. I mean, you're talking about Nvidia being bigger than, I mean, you have Google, which I think technically because of GOOG and GOOGL, so 1.75 and one, if I'm not mistaken, like Alphabet as a whole is still larger than Nvidia, but barely. This stock is just ridiculous. And what's insane, and this is where I think I'm just thinking out loud here. If Nvidia, and I'm just going to throw this out there, if Nvidia, let's say we rally back up to these highs again, and Nvidia for a split second crosses the market cap where Nvidia is now the largest company in the world, something tells me that I don't think that's sustainable. I don't know if that signals more of a top. I don't know. It just doesn't. It just seems
I think
weird to
so
me that a
too.
company can come out of nowhere and be the largest, the largest company in the world and surpass something like Apple. And it kind of feels like a bubble to me. But anyway,
I agree with you. Although I think because of this whole AI, the AI sales are basically a new growth market for them. So what kind of felt like they had their peak and they're one of these not blue chips, but they're kind of like Apple, I guess, reaching this sort of plateau and it's still growing, but not at the same amount. Now that they have this whole new market of stuff I hardly understand really, but the sales that they make in AI, the revenue generated in that particular market,
hmm
uh, basically started them over as another growth stock.
right.
And this is just, I think, right now is all the potential. This is like the hype, the potential of where the
Absolutely.
market's going to be. So I agree with you.
Yeah.
It's too high now. It's going to have to come down and work its way back up there with
Sure.
the value it generates over time.
Yep.
But yeah, I think as soon as it's like this is the largest company on the market right now, that's like buying the rumor, selling the news sort of idea. Once it
It
hits that,
absolutely is. Yeah. And the hard part is, I mean, this is a trend I don't necessarily want to short. I'm not interested in shorting Nvidia. I'm interested in a reality check. And like I showed here, it's like this low to this high. I mean, I'd like to see just a very common, easy to find pullback level. And I
right?
do think the market's interested in buying it again, but give buyers a chance to come in my opinion. So anyway, it's going to be an interesting play. I shared this morning in my trading room. A couple things you guys can put on the radar as well. I listened to some interesting content last night. This guy was pretty wise as far as monetary policy is a decision from the governments. It's a decision. Right now we have essentially synchronized monetary policy from the entire central banking world, meaning this: the Fed, everyone is watching the Fed. Everyone is looking for the Fed. The ECB and the Bank of Canada want to cut rates. The Bank of England wants to cut rates. All these other central banks would love to cut rates. The Fed is holding firm right now. And arguably, we had CPI data that was a little bit stickier this week on Tuesday. We go into FOMC next week. We know that Jerome Powell's been very consistent on his language, right? So, a
Yeah,
couple things that I'm taking away from this: as we get into March and see a pause, we don't have a Fed meeting in April. We come into May. That gives us more months to see, like, where is the CPI data going? If the CPI data does not get below 3% year over year, everyone wants to see the Fed cut. Everyone expects to see the Fed cut. They went from a 6 or 7 cut forecast this year to like 2 or 3. And if our inflation data year over year does not get sub 3%, I don't think the
it'd be
Fed is
zero.
necessarily looking to cut to appease the market. And that could be in line with, where we see this buy in May or a sell in May, go away type adage where you have this big run up ahead of the Fed and all of a sudden they disappoint the market in some way. And a little bit of reality just grips the market for, maybe this summer. Now, another thing that was interesting is if we see an uptick in unemployment anytime in a calendar year, if we've seen a running 12-month window of unemployment going up by 1% or more, it is always followed by a recession, which I thought was interesting because all I kept reading about the last several years is going back in time since, the 1970s and 80s, where anytime we have an inverted yield curve, there's a 24-month window to have a recession. Well, I thought it was interesting.
We're
Like
past
now
that
there's an
moment.
unemployment factor that goes with it, which to me makes a big difference because the Fed's true like mandate, they have a dual mandate, right? They want price stability and they want job stability, right? So it's price stability, job stability. And if we see an uptick in unemployment, that's going to either force the Fed to be more reactive. That's going to, but it's crazy, like 1%. So if we go from, and we just had a tick higher to 3.9, but you go back a year, I went back to February of last year, March of last year, we're sitting around like 3.3, 3.4. So one thing to watch on the unemployment factor when we have these non-farm announcements is looking to see if we start to see 4.2, 4.3, 4.4. If those numbers start popping in, that's that 1% window where I think, again, everyone's been talking about a recession for 3 years. We're staring at all-time highs and the market rips, and thanks to Nvidia and thanks to other stuff, the market just keeps ripping. But reality is somewhere out there. Reality under the hood is somewhere out there, and maybe it's unemployment, maybe it's the Fed being reactive, maybe it's the Fed not appeasing the market with rate cuts. And again, I'm
No,
pontificating, if
I'm
you
with
will, but
you.
it's just there's a lot of stuff out there that have to be factored in.
I agree with you. I also think there's a big difference between the situation. Oh, what's this? Yes, please. Happy birthday, Drew.
Donut
It's
time?
Drew's birthday,
Nice.
so
Happy
he's
birthday,
giving me
Drew.
a donut for his birthday.
That's awesome.
But he's back.
Happy birthday, Drew.
Here he
Hey
is.
everybody.
Happy birthday, Drew.
Hey
Chat,
guys.
chat, say happy birthday to Drew.
Say happy birthday.
Chat
Thank you.
in.
He's 21.
Oh boy, just a child, just a babe.
Just kidding. He's like 27 or something.
Okay, nice.
But
Hopefully those are fancy donuts.
yeah. What was I going to say? The idea of rate cuts, I feel like there's two scenarios, and
Okay.
one of them is if inflation is coming down towards that 2%, that's more of a luxury for the Fed to cut rates.
Yes.
Seeing inflation stubborn or slightly higher
Yep.
with lower output and worse jobs numbers, that kind of forces the Fed to start. They kind of have to do something now. Leaving rates where they are is clearly not working because inflation is going higher, jobs are falling, the economy is doing worse. So what do they have to do? It kind of forces their hand to start cutting rates, and that would be a bearish scenario in my opinion.
Yeah.
Where they cut rates and it's not a good sign.
Right.
So seeing one of those two in different contexts determines whether it's a good or bad thing. That's all
I agree. And again, I'm going out to the end of the year with this watch tool, and the market is still pricing in anywhere between 75 to 100 basis points different than where we're currently sitting. So I do think that rate cut cycles are likely. I think there's that 2 to 3, maybe 4. And this is the thing is, I always hate how important the Fed is. But the adage right now, it's like don't fight the Fed. And so the market waits with bated breath every single month with the Fed, with Jerome Powell, with an FOMC, and all these big decisions. And sometimes we don't get a major catalyst or mover until it's all about the Fed. And so this week, CPI and PPI, not much is happening, right? Like we had some volatility yesterday where, market dips down to, I'm looking at the SPY, we dipped down to like 511 and then rip up to 516, 517. Today for a Wednesday, kind of the meat of the week, there's not much happening. And so I don't think I was looking at some 0DT opportunities. I was like, maybe I can do something at 520 on the SPX or 520 on the SPY. I just don't think we're going to have enough movement today. I'm seeing my call and put option volume sentiment favoring the put side, but I'm not getting much follow through on it today. And my, gamma levels and open interest are extremely thin. So I don't know, man. I think like the market's just kind of waiting for something. And this is what is frustrating, right? Like think about, trading currencies and hurry up and wait. Like you take a buy on a currency and then it's like, there's no follow through. I mean, I'll go back to this. I'm not sure what you and Nick are looking at for, the dollar index, but I'm literally day after day looking at this dollar index and thinking like, I don't know what the dollar wants to do. I think that we have a situation where risk off flows, if we get risk off flows, that should help the dollar go up. If we have risk on flows and this just melt up keeps happening, then sure, I can see the dollar, drifting lower, but I don't see the dollar plummeting. I mean, if we go down and retest support in the dollar, I see the dollar being range bound this year. And right now, it's like the dollar still has one of the best carry trade opportunities in the market. I don't think the BOJ is going to do anything that unravels their monetary policy to disrupt the forex market as of now. So, I mean, again, what am I doing? Like, is any of this discussion actionable? I mean, I think you and Nick talked about it a little bit this morning. I mean, I like gold a lot. We had this run. I've been long since this break above 2070, and I am trading options around GLD. And I think I've got two measured moves here. My ultimate target on GLD and gold, gold up here with a measured move. You take this breakout and plot it up top. We're looking at 2470 on this. Like this is 100% completion if we get there. Okay. Now I took a halfway point, which is around 2271. To me, that is a high probability target. So if we have a break on gold, a pause on gold, I'm looking for that to be my next run to position for. So gold is up, Bitcoin is up, silver's making a decent run. Silver to me has even better potential as a breakout trade. We're just not quite there yet. We've had a nice little run off these lows at 22, but silver to me has upside to 35. And the way I get there is we either, test this level or we break out above 26 and we go. But I'm looking at, buying SLV down here, taking some paper trades on those ETFs. But I'm only going to trade like the spot price, not the miners. I'm not interested in gold miners. I'm not interested in silver miners. Not yet, but I just think that the actual like spot price continues to go up. So gold and silver, we'll see how they play out. Gold's had a nice bull run, and I think it's interesting. Like not a lot of people are talking about it. It's like it's ran up without a lot of people noticing, and maybe it's because the stock market's up as well. So like nobody's feeling gold right now as a hedge. Nobody's feeling gold as like it's an anti-inflation play. Like nobody's in gold because they're already killing it from equities if they've been participating over the last year,
Well,
So
you and Nick are on the same page. I never pay attention to metals outside of gold, which
mhm,
I mean, obviously I should. So that is also strange to see that silver, just because it doesn't move is why I don't really watch it.
yeah,
But because it's moving hard with gold, that was the first indication for me that there's probably something bigger going on here. And I think that when you say you don't think the dollar it doesn't know where to go, that's because the
mhm.
Fed doesn't know what they're gonna do yet either, and we
That's
don't know what
true.
the Fed's gonna do.
Yeah.
And what you said, gold could trail lower. You don't think it will collapse. It's still a good carry trade, and so I can see the dollar really getting hurt in this scenario. I don't know the extent of how far it could fall, but I definitely think that the dollar index can go much lower. It can make that lower low you got with that falling trend line at the
Mhm.
bottom.
Yeah.
I think that's very possible within like a year or so, just because of if this trend is going to continue and gold, the way it's moved so far, there's a lot of money going into this sort of hedge against the dollar.
I
Bitcoin's
agree.
up too, like what you're typing.
Yep.
Bitcoin now, you're seeing legitimacy behind a cryptocurrency,
Yep.
um, which is also very strange because I adoption is not necessarily um, a factor in this scenario. It's just gold or the dollar does not seem like the place people want to be right now, which is kind of scary to think about. So,
Yeah.
uh,
If we had that conversation of, is the dollar going to be denounced as world reserve currency? Again, I know a lot of people are thinking like, what about? I think it came up in the chat this week. What about BRICS? Right? What about with what is it? Brazil, Russia, India, China, BRICS, and then everything that's anti-dollar. I mean, the reality is the dollar is still a very efficient and super liquid reserve currency. To all of a sudden, dethrone that, to destabilize it, I think that has a lot of repercussions for the entire financial industry. the entire global economy. I'm not saying it's, I'm not saying it's going to be not challenged. I think that that's what's happening now is like we're clearly seeing the dollar's challenged out there. But I think U.S. economy is still large, and unless, and when I type this out, gold and silver and Bitcoin up, we're clearly seeing the dollar going down. But in addition to that, I mean, if the dollar gets weaker, it's going to be interesting if we have not only like these precious metals, but also commodities in general. If we have oil going up, if we have uranium going up, if we have all these different energy plays for, something that's just a bigger move against the dollar across the board. And you're right. I mean, if we go back to a higher time frame here, we can see plenty of technical reasons for the dollar to fall, right? At the same time, this is where the dollar was back in, the early 2000s when we had a, dot-com bubble. We look at this trend line. So I would point out like that's where the dollar could be. This is where the dollar can find some support. If we have a high, low, lower, high, lower, low, you're right. I could see the dollar breaking 100 and we had that fake out over the holidays, but could we break? Sure. But how much lower does it go compared to that support or compared to this trend line?
I mean, that's a very good question. I don't know. I don't know if anyone knows, but
well, I mean, we don't know. I mean, nobody knows. Nobody has a crystal ball. I just think that we watch. And so what I'm saying for the last couple of weeks is I'm waiting on a little bit more confirmation on the dollar. And I know that I'm possibly wrong, but I am currently, I'm long dollar Swiss, I'm long pound dollar. Those are not going to go in the same direction, right? One of those will be a losing trade. Now, for me, I'm a little bit more stubborn on the dollar Swiss because I get positive swap. That thing's at 20 and 30-year lows. I'm still going to hold that dollar Swiss long. Pound dollar, I reverse positions. Euro dollar, Aussie dollar, New Zealand dollar, I'm waiting on. Dollar CAD is garbage to me. I don't know if you guys trade the dollar CAD much, but it has been like the sloppiest currency pair for me the last couple of years. And all I'm waiting for is a good opportunity to do something with it. Right now, it's in the middle.
Yeah.
I have no interest. Down here, I'll buy it. Up here, I'll sell it. In the middle, it is so difficult to pick a direction because, could oil keep going up and drop the dollar? Sure. But down here at 32, 31, and 30, I'm going to buy the dollar CAD all day. The BOC is not going to be more hawkish than the Fed at some point. Now, yes, oil could help the CAD a little bit, but structurally speaking, if we hit 32, 31, or 1.30 on the dollar CAD, I'm buying this thing for 1,000 pip upside. So
right.
there's always going to be a trade. That's what's kind of nice, right? Anyway, somebody's asking about gold. I mean, I think we just talked about it. I like it, right? I'm
That's
long.
like all we've been talking about.
Yeah, I mean, I'm looking for continuations. It's just, I think if we get a decent pullback, I'm buying the dip. Somebody asked me yesterday in my Discord, like, what if I got long now? It's like, well, I mean, if you got long now, that's fine, but give yourself enough time to let this thing, have a breath, right? This is a big rip on gold that we haven't seen in a while. So a little bit of a pause is fine, but what spurs this higher? We probably have to get through the Fed. We probably have to get through, it's going to be like an April, May window. If we're going to go any higher, we have to give it more time. I think that, there's this instant gratification that happens in trading because you've got zero DTE and you can take a trade and watch it happen, but there's always a timeline. I'm looking at, for the next 3 months, could I be right in direction? For the next 12 months, can I be right in direction? And I try to position for that. So one thing I want to talk about with you, I mentioned this, we were chatting offline, but this trade, I'm going to monitor these couple, because I built this and constructed this a bunch of different ways this week. And this is quickly becoming one of my favorite ways to play, like week to week. The nice thing is you can see on my chart, as far as my risk analysis, this is just it's a complex options trade, but all it means is I need about 50 points on the SPX one way or the other. The weekly average is 100. So in a given week, I am highly confident in the probability that I can get a 50 to 60 point move one way or the other to get me paid. If we have a big move, that's profit. That's profit. Even if it goes beyond my levels, I still make money. This is profit. This is profit. Goes beyond my levels, I still make money. So I have 6 ways to make money. I have 1 way to lose.
That's I have a question on this.
Yeah, go ahead.
So it's similar. It's not exact, but it's similar to like a straddle or a strangle or condors. But when you look at plays like this, usually the amount of risk is exceptionally more than what you can make. And here it looks like what you're doing
Uh-huh.
is for an X amount of risk, you can make what looks like 4 or 5 times that,
It's
which
true.
is like, I'm curious. I don't know if I'll fully understand it in this session, but yeah, I do want you to explain like what there's 3 calls that you buy and then there's 3 that you sell. Is that what you're
It
doing or
it's 2 and 2. I have so I have a sell call here and a sell call here, and then I have buy call, buy call. I have a sell put here, then I have a buy put, buy put.
but
So the reason that
how do
go ahead.
you sell a call? Are these naked calls?
Well, because it's a sell and a buy and a buy and a sell, it's technically still a spread
Okay,
because
so
it's,
you can okay,
evens
you're
out.
creating a spread
Yep.
on your
So
own. This
it's
isn't
still
like a
defined risk. So
okay,
like this trade right here, because this is the SPX, by the way, so this is fairly expensive. SPX is a $5,000 instrument versus a SPY at 500. So this would cost me, maybe $2 on the SPY, okay, but it cost me about um, well, I take that back. It cost me about $1.20 on the SPY, and it's going to cost me $11.20 in the SPX. That's just because the SPX is 10x instrument, right? But it's still defined risk because my spreads are here on the put side. My spreads are here on the call side. Now I do have max risk. The most I pay for the trade, if this goes absolutely nowhere, this is my max risk. And the nice thing is because I have sell options going, I still actually collect the credit on those sell options to offset this max risk. So if I don't hold this all the way to expiration, I'm only risking about 50% of this trade instead of 100% of the trade. So rarely will I go into expiration with this thing being full risk, which is another reason I like it. What's the downside of this trade? It's pretty complicated and complex. But once you get the grasp of it, I mean, I'm just essentially going out every 7 to 10 days and looking to see, okay, so I've got to spend about $1,200 on my account. Okay. I did this trade on Monday and I had a debit of $12.80. Well, I closed it out for $15 within 2 hours of the open on Tuesday. Now, if I don't do anything, and this is what I'll keep you posted on this as well, Frank, as the week develops. But right now you can see this dotted line. This is the spot price of the SPX. If
right.
nothing happens, this continues to get less and less and less, and I'm taking on more risk as the week goes on. But if we have a move with tomorrow's PPI and we have an up shot or a down shot, again, once I get into this green area, I can start seeing some ramp up in profit, ramp up in profit. If I wanted to be a little bit more, patient of the time, I get some really good reward out here. So my example, if I'm risking, $12 is my max profit, this upside here is 13. So I mean, this is a 1-to-1 where I can risk $12, I can make $12. If I go, if the expected move is a little bit further, then all of a sudden we're talking 2-to-1. And this is my favorite part of the entire trade. So you said this is like a straddle, like a strangle. I'll build one of those and I'll show you that it's very different. And it's just because there's more legs to it. But if we go way past my levels, I still make money out here because my long options are so valuable at that point that they still get me paid. So,
Okay.
like I said, there's 6 ways to make money and 1 way to lose. And I get it. Like this isn't foolproof, and I'm never going to say that this is the greatest trade ever. It costs a ton of money to take this trade. It's a big debit, and it also is a crap ton of fees, right? If I'm paying for entries and I got to pay $1.20 per contract, that adds up, right? Every single week that I'm taking this trade, that's going to cost me thousands of dollars in commissions. But of course, I'm trying to make money. So let me show you the difference here. If I just cleared this and give me, you want to see like a strangle or a straddle, because you can do longs, right? You can do long strangle, long straddles.
Right.
Okay, so
Either
let's
one. Let's
let's
just do
build one.
straddle.
Okay, so let's build one. Let's do a straddle, and that's essentially just an at the money. So I'll just take this,
It's
okay, and
easier.
so we'll do an at the money, and let's trade. Let's do the SPY. So that's a little bit more of a cost-effective instrument. So if we edit the SPY and just do an at the money. Now I'll say this, current time right now, it's March 13th. Let's go out to the 22nd because that gives us the time to get through the Fed next week in case the market's a little slow and sluggish for the rest of this week. And we're trading at current price, 516. We buy a call, we buy a put, right? This is a long straddle. Now, I wish I could zoom out of this thing. But point is, If nothing happens and it stays right here, then this is where my max risk is. I pay $8 for this debit, and I need price to get above or below this level. So if the SPY can get above, we'll say 525, we're making money on the call side. If the SPY gets below 507.50, we're making money on the put side. But that means that the SPY, this is what's crazy about a long straddle. 507.50 to 525 is 1750? That's crazy, dude. Like this thing, in order for me to get paid, we only have to go about, I'm trying to think here, maybe $8 that way and maybe $8 that way, right? That's our break even based on the debit. It can do that because yes, the SPY can move, $10, $11 on the week. Last week it moved $13. So we know it's capable of moving that much. The problem is if it decides to go up, $5 and then go down $10, that's not going to cover my break evens, right? So you have unlimited profit potential. And these are awesome trades when the market is ripping beyond those expected moves. But that's what you're buying, is like you're buying the high volatility, you're buying the catalyst. And sometimes they're too expensive. So what I typically look at if I'm doing a straddle, and we talked about this, if I just added in a couple of sell legs against it. So if I buy the 516, let's just sell on the call side. Let's sell the 525. So we'll go $10. Let's go with the 526. And then the 516, let's sell the 506 put. Okay. So what this should do is this should reduce the debit significantly. And now, let's see here. I did that incorrectly. So I've got to change these to buys. So the 520, these have to be sells there. This will change the profile quite a bit. Okay. So now I go from paying $8 and change to $6 and change. Now, would this be a little bit more acceptable if we go to, the 525 mark? We're almost maxed out a profit. If we go to the 507, 506, we're almost maxed out a profit. I put my strikes $10 apart, right? So my max profit here is $10, but I'm paying $6.25. So that gives me $3.75 a profit if I'm correct. And I tighten up this window where my risk is at. I reduce the size of my debit. So this is what I typically look at is I want to make my debit smaller, and I want to make my weak spot in my trade smaller. And, I understand that this is not an unlimited gain, but the probability of profit is higher now because I'm paying less for the trade. And my profit target, if it's 625, let me do the math here. So if I made 375 on the trade divided by 625 debit, I'm getting a 60% return. And this could be in a matter of a week and a half. So if you want to be high probability, what's 25% of a 625 debit? $1.56. So I do this trade all the time. I do this in my trading room. If I take a trade for $1 or for $6.25, I could set a take profit at $7.75, right? Because I'll take that 25% take profit, just set the target at $7.75. And a lot of times that gets hits that will get hit every single week. It's just
are you selling? What did you add again? You added some sells.
Correct. Yep. So look at the legs here. So I have the so I did the initial straddle at 516. So I buy the 516 call, buy the 516 put, and then
It's
against those, what's that?
It's a little tough to read, but
okay.
I'm just trying to listen to what you say.
Okay. So here I'll just type it out. If it's hard to see it, then here's what I'm doing. So it's a 322 expiration, and we'll call this a long straddle. So I buy the 516 call, I buy the 516 put. Okay. Now that by itself is an $8.25 debit. If I add to that a sell on the 526 call and a 506 put, those give me, right, that's $10 difference. You follow me? Yeah. So a $10 difference. And the $10 is now my max profit. So if the floor falls out of the SPY and we go to 490, doesn't matter. I'm capping my profit at 506, which is a $10 difference. Fine. So, but the nice thing is instead of paying $8 and change, I'm paying $6 now. The probability of current price moving at least $6 one way or the other, that's very, very high, because every single week the average is like $9 or $10. So this should allow me to see a profit regularly, right? It should. Now, does it happen every week? Not every week, but most weeks, yes. In my trading room, we've had countless weeks where, I mean, going back to, I launched a course like last summer. It's like every week we did straddles and strangles and had profit almost every single week. It was a very easy trade. And this is how we're doing it a little bit more cost effectively. So that way we don't pay a ton for those debits. We max out our profit, yes, but we increase the probability of profit. So all I'm doing is, like you see there, I'm selling a call against the long position to help me offset the cost. That's all it is.
So you build these, I guess these trades up beforehand as like a limit order or something, or do you like? Is there a pre-built? I
Well,
don't know.
I build it here first, right? I can see every leg. So if I do this and I price it out, I can see that I'm gonna pay about 625. Now, what I like is, what is this level? What is this level? Here's my max risk. Okay. So as long as I'm confident when I look at my chart, if I believe with a high probability that price can get to this level or price can get to this level, that allows me to take profit. And so I just need to, and I can build this out where I could probably show going into next, I can build this in Tasty Trade and probably see a probability of profit here. Let me delete this trade. Let's go to the SPY and let's build this out, and then we can wrap things up. So if I went out to the 22nd and I do a straddle, so I'm going to do the long 516 and the long 516. Now, all I want you to do, let me zoom this in again and see the probability of profit. Here is a zoom in. So I buy the 516s. If I sell against that, here's the 506 put and here's the 526 call. Okay. So I have the long call, long put. I sell the call and I sell the put. Now, right here, my probability of profit went from 44% to 61%. Okay.
Okay.
My max risk went from $8 and change now to $6 and change. My max profit is capped, but probability of profit 61%. So if I wanted to increase my probability, watch the difference here. If I did like 516, if I go 510, and then I do a 522, so I'll go $6 different, right? I can increase my probability now to 70%, but my max risk is what I pay for the trade, but I cap my profit because I'm going $6 here. I'm still paying $460 for the trade.
Did the risk go up?
The risk goes down because I'm paying less for the debit.
Okay.
Yeah. So the debit is less, but I mean, I'm still capping my upside. But again, I went from a 61% probability now 70% probability. Right.
Okay.
So again, this is what I keep talking about. Like, I love options because there's always a trade-off. If I want to increase my probability of profit, I'm probably gonna have to take a less reward than risk. Right. If I want to increase my reward to risk, then I'm gonna have to take a slightly less probability of profit. But
Right.
rather than just doing this by itself, okay, if I just did that, I'm paying $8 for this trade. And worst case scenario is, let's say that over the next week, price goes this way, this way, this way, this way, this way, and it goes absolutely nowhere, right? If I can't cover that $8 that I paid for this trade, I make $0. This trade will just become worthless. And that's what sucks, is I don't want to go long options and have it expire worthless. So if I'm going long the option for volatility, I'm trying to price it in such a way that I have a high probability profit. So we start out here about 50% because we're at a straddle. But if I want to take that, increase it to 70%, the way I do that is I cap my profit here. I cap my profit here, but we do that within an expected move that can happen all the time. Right.
Okay. Yeah.
So a lot of ways to do it. And one more thing. So you said straddles and strangles. So a strangle is this. If I did a 517 and a 515, that's now considered a strangle.
Right.
Just look at the difference in price. If I put them together and this is a straddle, that's 829 in a debit. If I do one strike apart, now it's 731. So a strangle just moves your strikes and you go, it's kind of technically going out of the money by a strike or two. And you can take this as far as you want. Like, I did this a lot last year. I would do like the 30 delta on all of these, and so this is a 521 by 510. Now I pay $4 for that debit, and I have no cap on my upside. So if we have a big volatility mover by the 22nd, if I pay $4 and the Fed, whatever we need for a catalyst, if this market, just dumps to 500, I'm going to be up $10 on I pay $4 for it. I can
I
make
mean, but
more
that's
and
a
more
heavy
than risk.
move, though.
What's
Like
that?
this seems like something you would do on, I don't know,
It's
not
it's it's
every
great.
week.
Look, FOMC, it's great for. CPI, unfortunately, this week was not a big mover. But CPI and PPI and like all these major catalysts, it should be a good one for. But not right now. I mean, I think right now it's going to be all about the Fed. As I'm watching price today, be very slow. Maybe the market's just, we have PPI tomorrow, Fed next week. We'll see if the market opens up the floodgates a little bit more. Remember this too. It's also Q1. We've had a great run out of the gates. The market's so complacent right now just to be bullish, bullish, bullish that it doesn't want to roll over yet. And so there's like this personality to the market. There's a cadence and rhythm to the market. Sometimes you just gotta, put your Keanu Reeves Neo cap in and just plug into the market and just like, what do you see? If you see bullish, be bullish. It's if you're always a contrarian, some contrarians make a ton of money eventually, but when you're wrong and you're trying to short Nvidia, short Nvidia, short Nvidia, it's like, why? You miss. You're wasting time and energy when you're fighting these ridiculous moves that are pretty darn obvious. So anyway,
Yeah,
fun stuff.
no, it's very true. Um, I'm usually never a market contrarian. I'm always like a bull. This is just one of those few times, I guess.
Yeah. I'm a sentiment contrarian. I think that once we get into, I mean, you guys have it on the EDGEFINDER. I mean, when you look at the AAII or the Fear and Greed Index, I'm definitely contrarian when it comes to those. I mean, the perfect example was last October. The fear and greed was extremely fearful. The CTA positioning was incredibly bearish, and it pivoted so quickly into that end of October last year. And here we are looking at 4 straight months of bullishness. So when we get to extreme greed, it's
That's when
time
you
to
gotta
start
get,
looking to take some profit, protect some profit, just make
yeah.
sure that you're not getting overly exposed to the long side because more of the reward to risk is favored towards at least a correction.
And
So
that's where I feel like we are now,
yeah, I think
but
so too.
I could be wrong
Yeah.
because my short plays have yet to come to fruition.
Yep.
But
And look, man, here's what there's a couple ways this happens, right? And then we'll wrap up the session. I got to jump into my other trading room. A lot of times the markets, like this, we've had this trend line drawn here, Frank, for 3 or 4 weeks, right? There's
yeah,
nothing about this, and I mean, I think you talked about it. If I don't see this thing breaking, like you can't force a trade. So there's 2 ways this happens. We either have this massive correction happening very quickly, and the market just cleanses itself for the correction, or what's even more frustrating is we could be right directionally on the bear side, and we can see that the market just slowly grinds or kind of rolls over and then eventually starts to give back. But that timing can drive traders crazy because you're like, it's time to short it, and it just takes days and days and weeks, maybe months before the market rolls over. So it's either going to be like a quick cleanse or it's going to be this slow like roll over top, but eventually, when it rolls over and the floor breaks, that's when we get those big corrections, and we'll see it. I mean, markets don't go unchecked. Look, Bitcoin's rally doesn't go unchecked. Gold's rally doesn't go unchecked. Nvidia's rally doesn't go unchecked. I promise you that we will see some obedience in the markets. We're not just going to have endless green candles. We're not just going to have to the moon. Like stuff gets checked, and there's going to be highs and lows and wave structures in these markets. It's just how and when and what's kind of driving it. But that's why it's a game. We got to play the game.
yeah, yeah,
So
very true. Well,
all
I
right,
guess
dude.
but yeah, I guess we'll wrap it up here.
Okay. Well, let's talk again whenever you need. We have PPI data tomorrow, so
Yeah,
obviously things are going to be moving and shaking a little bit. Melt up continues. We're just kind of clinging to these highs. I think the 520 level, 5200 level on the SPX is at least a near term resistance. I just keep staring at the chart. I love this indicator that you see here. It's overbought with divergence. It hasn't failed me in over 20 years of trading. I know it's early. I know it's anticipatory, but this is the best way for me to get ready for some type of correction. And it's just a matter of what is the bow tie and the serving of here's your correction. I don't know what it's going to be. I don't know. I mean, we don't know that, but I do think technically that it's coming. It's just a matter of what and when. So, but guess what? We'll be here to catch it.
Yep.
Cool. All right, Frank. Thanks,
Hopefully.
dude. You can sign us off, and I'll see you guys later.
Okay. Thanks, Chris.
Thanks.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.